Good evening. Welcome to Markets Today. I'm Lata Venkatesh and with me is Surabhi Upadhyay. It was a fourth consecutive day of gains for the market, and today the gains were backed by some fundamental support. The support prices for agricultural crops, for kharif crops, rice, jowar and pulses were modest, in line with what economists were hoping, and with the confidence that this will not be inflationary, the market had another reason to cheer today. Hi, Surabhi.
Hi, Lata. Yes, once again, we've got green on the screens towards close. So let's start with the headlines. Markets end higher for the fourth consecutive day on lower than expected rise in food grain support prices. The Nifty is up 0.5% to 8,091. FMCG and pharma stocks lead the up move. Steel stocks rally after the government hikes import duty on steel by 2.5%.
Mid-caps outperformed blue chips by a wide margin, with the mid-cap index rising 1.5%. Hathway Cables gained 7.5% after UBS upgrades the stock. Ramki Infra hits 20% upper circuit on plans to monetize its road assets. Financial Technologies surges 17% on heavy volumes.
The government hikes the support price for paddy by 50 rupees per quintal. The 3.7% increase is in line with expectations. The government also offers a bonus of 200 rupees per quintal on pulses over and above a 50 to 75 rupee hike in support prices. Markets rejoice as support prices have been increased between a range of 4 to 6%.
Well, those were some of the headlines that dominated the market mind space. Here are the experts that we have lined up on the show for you. Sanjeev Prasad of Kotak Institutional Equities will join in with his take on the markets. Sudarshan Sukhani will join in to talk about what the charts are saying. And we will also get you what the government had to say about their decision to increase support prices for various agricultural commodities. All that coming your way the next half hour. But first, Surabhi, markets.
All right, so let's talk about the day, which turned out to be a good one once again. Well, for the fourth day in a row, we have green on the screens. Markets continue to charge ahead, even though gains are only marginal. Of course, they come ahead of certain very important global events in the form of the FOMC announcement. Sonia Shenoy is now here with the day's trading highlights. Sonia, the winning streak continues.
Oh, yes, indeed. In fact, the good part about today is that unlike the other days where you saw a lot of speculative trading, today you saw a lot of buying interest in, heavyweight names. So the blue chips really led the markets today, whether it was names like HUL, Reliance, L&T, ITC, all of them moved up with quite a bit of strength. And not just that, the volumes picked up as well. And in the mid-cap space, there was quite a bit of outperformance. So good quality names there too saw buying interest. Now, if you look at the reason for the trigger, clearly it was the modest hike in MSPs that really boosted the sentiment, and the market believes that the government has acted very responsibly and not succumbed to political pressure, not come out with any populist measures either. So that really helped sentiment in a late trade. However, in terms of the gainers, let me tell you what the list looked like. As I said, blue chips saw a lot of buying. So HUL, Reliance, L&T and Bharti were the four stocks that moved with quite a bit of strength. Then you saw the pharma space give quite a bit by way of gain. So Cipla, Dr. Reddy's and Lupin were all up about 2 to 4%. On the losing end, however, the only niggling worry is that banks are not participating, and you saw that in the Bank Nifty today. You saw that in individual banking stocks, all of them under pressure, down about 0.5% or so. Vedanta and Cairn have been under pressure ever since that merger was announced, so those stocks too are down about 1 to 3%. Tata Power and Power Grid were a couple of other stocks that didn't do too well today. But the mid-cap saw big outperformance, and there was genuine buying seen. So names like Dish TV, Arvind, Britannia, Glenmark, so many of them hitting fresh highs in trade today and seeing good amount of delivery-based buying. Also, home finance companies have rallied post the cabinet approving that low-cost housing. So Repco Home Finance, Indiabulls Housing and Diwan Housing were a couple of stocks that moved well. And the government also notified a hike in the import duty on long and flat steel products. So that aided a lot of the steel companies like JSW Steel and Kalyani Steel. All in all, a good day for the market. Now the buying is becoming a little more broad-based. Back to you.
Thanks a lot for that, Sonia. It certainly has. You had, like Sonia said, home finance companies, you had small steel companies, you had a lot of solar companies, and many of them perhaps with financials that the market is not very familiar with. Indosolar, Moser Bayer, not really known for their extraordinary fundamentals, but simply because there was a government proposal announced by the cabinet to increase the amount of solar power. You just notice these small stocks doing very well. But the point of bother would be that between yesterday, day before, Friday onwards, there's been a bit of a a passing the parcel game being played. The stocks that rose yesterday, for instance, Bank Nifty fell today. You had some of the IT majors, Infosys and all doing well a couple of days before. Today they are losing steam. Likewise, media stocks were the flavor of the moment in the last 3-4 days. Today you saw a bit of profit taking in them. So is the market buying because it's convinced that as a whole the economy is headed in the right direction and that political governance has improved? Or is it just that it is playing for time, is a question you want to ask, because it's in a narrow range. All that is confirmed now is that there is a decent amount of support between that 7,900 to 8,000 mark, and short sellers are not profiting by shorting at that point. So they have stopped short selling. Beyond that, we are not quite sure whether this market has the gumption to go much higher than where it is now. So it is still much a wait and watch period.
Okay, so that's the market in terms of the internals. On that note, let's bring in a market voice. Sanjeev Prasad, Senior Executive Director and Co-Head at Kotak Institutional Equity, says that the chances for earnings upgrades are remote and that there are not many triggers for the market to move up in the near term.
But the challenge still remains in the sense, if you look at the slightly more medium-term scenario, more like a 6-month outlook, then there is really no trigger for the market. So yes, to some extent, maybe the negatives of earnings downgrades and weak monsoons, etc., have been factored in. But, I don't know what will drive the market going forward. The chances of earnings upgrades look very remote. If anything, you will see some more earnings downgrades. And clearly, there's not much of support on the monetary side. So, if you look at the triggers, there are really no triggers for this market. We are paying 17 times, remember, for this market. So, if you don't have 4% IIP numbers to start with, and I don't think 17 times market is justified in that case. Even 4% is too low to essentially justify a 17p kind of a market. Yeah, most of the good quality growth stocks are very, very expensive even now, even though they have corrected about 15 to 20% from their respective peaks. All the consumer pharma names are still very expensive. The only stocks which you can look at the more positively is maybe private banks, but even their valuation not really in your favor.
Okay, that's one opinion. Let's talk about the big story of the day. In a bid to safeguard farmers from a potential deficient monsoon, the government today increased the minimum support prices of various agricultural commodities. This is the price at which the centre will buy food grains from farmers. Here's Union Minister Ravi Shankar Prasad making the announcement.
Bonus of rupees 200 per quintal for pulses over and above the recommendations of the Agriculture Price Commission. आप लोगों को मालूम है कि एग्रीकल्चर प्राइस कमीशन रबी और खरीफ के लिए प्राइसेस तय करता है, तो इस बार जो उनकी अनुशंसा आई उसको हमने स्वीकारा है, लेकिन इन केस ऑफ पल्सेस वी हैव चोजन टू गिव rupees 200 per quintal as bonus.
All right, so that was Union Minister Ravi Shankar Prasad charting out the government's contingency plans for dealing with a deficient monsoon. Lata, of course, you've been going through all the details on the MSP hikes that we've seen. A little lower than the previous years?
Yes, it is lower than the previous years, and that would be a gratifying point for market observers. The fear was that with the Bihar election on the government's head, and so many stories of rural distress, unseasonal rains behind you, probably inadequate monsoons ahead of you, the government might simply want to give or at least be seen to be very pro-farmer, but that was not the case. The rate of increases for all commodities have been between 4 and 6%, making it the lowest in 4 years. Basically, this will leave the WPI practically unchanged. Only the minor increases of 4% will come into the food products. But the CPI is governed by the actual market prices. And in a drought year, this is not exactly a drought year, but a rainfall short year, which is severely impacting pulses. Irrespective of what the support price is, the market prices tend to be much higher. And they're already worked into the CPI. So, again, for economists, their projection of WPI and CPI has remained unchanged because of this announcement, and that is really the positive, that they are not upping their forecast of inflation, and that the government, when it came to it, actually held its nerve and did not succumb to populist pressures.
Okay, so pragmatism over populism, perhaps this time around.
You put it very well.
Okay, on that note, let's move on. The government has also notified a higher import duty on steel products today. The new duty, which came into effect from yesterday, now stands at 7.5% for long steel products and at 10% for flat steel products. So who benefits through this move and what the impact is going to be? Well, Nigel D'Souza is here to explain that to us. Nigel, the government has moved to safeguard domestic steel majors. How big an impact will this be for different companies?
That's right. In fact, the Steel Ministry had requested the Finance Ministry earlier this year to go ahead and take some steps, and in fact that's come about. So in terms of gainers, there are two categories in steel: flat steel as well as long steel. So flat steel producers primarily include JSW Steel, Tata Steel as well as SAIL, while in terms of long steel we have JSPL as well as SAIL that produce. So that's the difference in terms of long as well as flat steel producers. I'm told flat steel producers will benefit more because they have a more amount of imports and more amount of flat steel imports. I'll take you through a few more of those small companies that were rejoicing today. They should be flashing for you on the screen. Kalyani Steel, Sarda, Uttam Galva, all of them were flying away. What's the impact though? It's a marginal positive in the near term at least, and will protect steel prices from falling lower. In terms of what this 2.5% hike it means, it will translate to nearly around 600 to around 700 rupees per ton, or around $10 per ton. Post this hike, now landed imported steel will be only around $20 cheaper in comparison to domestic steel prices, and prior to this 2.5% increase, they were nearly around $30 to around $35 cheaper. So it gives you some kind of relief, particularly for the central India consumers. They in fact would look at domestic steel prices and domestic steel users at least post this big hike. Going ahead as well, domestic steel price producers, they'll be finding some kind of relief, while in fact we will see that maybe Chinese steel producers can go ahead and in fact cut prices, and then they'll nullify this entire exercise. But nonetheless, some relief coming in for the ferrous sector that has been crying hoarse in terms of this hike of import duty.
Oh yeah, at least sentimental relief, you will have to say, Nigel. Thank you very much for that. Now, the one steel counter which definitely got back some of its sheen in trade today was Tata Steel, with the stock gaining close to 2% in trade. This after trade unions representing Tata Steel workers in the United Kingdom decided to suspend their call for a strike on June 22nd. Kritika Saxena, who broke the story early morning today, is with us with more details. Kritika.
Hi Lata. So remember, we had reported earlier that Tata Steel had moved the ACAS, which is the Advisory, Conciliation and Arbitration Service, to look at reaching a mid-ground with respect to the negotiations with the UK labour unions. Now we understand, and UK labour unions have confirmed to CNBC TV 18 that the conversations with ACAS have been positive. In fact, the very fact that Tata Steel has moved ACAS and presented a revised proposal is a big positive, and clearly means that Tata Steel is looking at avoiding any industrial action. In fact, the UK labour unions have confirmed to me that Tata Steel has presented a revised offer which is beneficial for the workers. However, it takes into account and it takes into cognizance some but not all of their demands. So they're working on this right now. They are negotiating specifically the retirement age, which was the main bone of contention. They are negotiating on that particular counter right now. And I understand from my sources that in the next couple of days, they are hoping to reach some kind of a mid-ground and come out with a revised pension plan. But it's not the end of the road yet. What we understand is the 22nd June strike, that was a 24-hour strike, has been called off. But if at all the discussions aren't satisfactory, it could be again brought back on the table. But for now, the fact that they are having discussions across the table, amicable discussions and no strike, is a huge positive for Tata Steel, given that around 60% of their revenues come from Europe.
Okay, all right. Kritika, thanks so much for that. Yes, Tata Steel definitely a big mover in trade today. Well, from steel to natural resources, Kane India and Vedanta Limited came under pressure in trade today after CNBC TV 18 broke the story that LIC, which is one of the two prominent minority shareholders in Kane India, is not yet in favor of the Kane Vedanta merger. LIC, which holds just a little more than 9% in Kane India, wants a sweetener for the deal for minority shareholders and a higher dividend on the redeemable preference shares, which will be listed on the London Stock Exchange. Well, the Vedanta management is expected to hold further meetings with LIC to try and secure their approval for the merger to go through. On that note, let's slip into a quick break, but coming up on the other side, Sudarshan Sukhani will be joining in for a technical chat. We'll also tell you about all the other stocks that were in the news today.